Today is the 19th of April, 2024. It's a Friday. And I like to talk about gold again because it's one of the best performing assets nowadays, especially. It's not always like that. Sometimes it's called a piece of tin and junk. Sometimes it's the best. So, but there is undeniable truth that governments only collect gold in their vaults. So, no matter how you call it as an investor, it's gold is gold for the government and for most people. 3 billion people just in China and India and Indonesia and Turkey and many more added. I can say 4 billion people just love gold. That's it for history since 10,000 years from South America during times of Mayans and before Egyptian times in Africa. It's been adored and collected and saved and chosen as a very valuable metal. So after not this, I'm not going to discuss the natures of it. We rather work on historic returns, not going too far like Egyptian times or Mayan times, last 30 days, where we can compare, is gold a good investment or is it a bad investment, comparing with the S&P indices, which is American Stock Exchange, which has been performing extremely well during the last few years. You may always say, choose another specific stock from the indices like Nvidia, and you can say it outperformed. Or you can choose recently Bitcoin and you can say it outperformed. But we are talking about 30-year history, and most of those companies didn't even exist at that time. So we are going back to 1994 to 2024. So this will give us a good idea for people at the age of 20, 25, 30, what they could have been making or they could make if the same returns just continue on all investments. So let all these graphs and sections I'm going to mention, I posted in the explanation portion of this video. So don't bother going back and forth and coming back. If you want to check them by yourself, they're all attached to the explanation section of this video. This is a live video. So I only make videos live. I never make, pre-adjusted, pre-printed, then fasten the talk, because that's why some people may think even in my Turkish videos I'm talking real slow. It's because I don't look at anywhere. I don't read from anywhere. I just show you and talk you, on that very second. So if there is any accident on the internet, that's not unavoidable. Okay, so let's get on with our mission of comparing and seeing which one is good or why you should choose one. Why don't you buy both? We'll talk about it. Now let's go to gold graph first. So I'm going to introduce you at this section, which now you can see. I'm sharing with you a 30-year-old gold graph together with some pet food ad. Okay, it starts from it's in goldprice.com and it starts from 1994. In fact, you can just tick here. It's 2005 US dollars per kilo or 373 ounces USD per ounce. So whether you like the Turkish or British way of counting, or US way of counting gold. So this is the starting point, 12,000 per kilo. And it goes up, 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 and then slowly for many years, then it suddenly starts to climb. As you can see, there is a huge climb from 2006 to 2010, 4 years of continuous climb. And this is a cycle. This starts here, it's a commodity cycle. Right now, we think it's another cycle that's starting. Then, due to excessive buying in this turn, like that happens in stocks as well, that's why Tesla stock goes down, Nvidia stock goes down, and it's called, small ones are called correction. the other ones are called bear, let's say, instances for the stock exchange. Then let's say the bear starts for the gold, it goes down to 33,000. So it's still 3 times as where it started, where at the depth of where it fell. And then it starts second cycle, as you see from here, after this drop. Second cycle always cycles past the previous cycle. So second cycle is here. So it passed the with $65,525 per kilo, which is also 2,038 US dollars. That's a peak above the previous close. Of course, this is not inflation adjusted. So we must always compare things inflation not adjusted in this instant. I will also mention you when for comparison inflation adjusted result. Now, as we see this peak at $2,338, it also makes a small dip all the way down to 56,000 right here. That's the depth of it. And then it starts climbing a third cycle. Okay, first cycle, second cycle, third cycle. So third cycle, we don't know how far it will go. Depends also on the inflation of the US dollar, the value, and also interest rates, how they can avoid or cannot stop it. So it may be a very long ride like here, continuing for 5 years, or it may be for 2 years or 1 year, 1.5 years. We'll see. But this is a very steep curve here. So right now we are at 2,400 US dollars. Well, it's about $7 below right now, but 3 minutes ago it was 2,400 anyway. So that's not a big deal. So this difference here from 12,000 to 77,000 US dollars, it's a 500. I just calculated it previously. It's about. I just have to find my posting on Twitter to tell you exactly what it was. Very recently, I was calculating it, and okay. Right here, I found it on my Twitter account. So the price from 12,000 to $77,140 and the 19th of April is an increase of $65,140 in 30 years. In dollar terms, this is a 542% increase, excluding itself. So it's total 642, but increases 542%. So dividing this just was plain calculation, 30 years, it's 18%, 1806 per annum increase in US dollars. Okay, gold increased 30 years, 18%. If you look at the last 15 years, it's 7.5% in US dollar terms. So we had much steeper increase in the previous 15 years. So I'm giving you all these calculations because you can choose any narrow area and come up with extremely good examples, or choose another specific 3 years where it just stayed at the same value for 5 years. But that's why I'm taking a look at 30-year long term for both of them, because we are just comparing apples to onions, okay? So they must be at the same term. What were apple prices 30 years ago? What were onion prices 30 years ago? Okay, without playing around with these numbers. So right now, knowing this number, 18% increase, there are no dividends, nothing, just the value increase in US dollar terms. Now, let's go back to two graphs I will show you. One is US stock exchange increases, and one is historical average site, and another one is comparing directly how many ounces gold can buy this S&P stock index. So at this page, I will just share with you and check if it's showing on your site. It normally isn't, so I must make sure. Okay, Now, this is a website called Historical Averages TradeThatSwing.com. Average historical stock market returns for S&P 500, 5 years up to 150-year averages. But because I have 30 years of gold shown on the gold price graph, so I'm just going to go to 30 years here. But as you will see, when we compare all these years on this side, 150 years, 9.24% in US dollars. Please pay special attention. These are dividends reinvested, okay? So don't say that, why don't you count the dividends? So dividends are invested back, okay? So this is why we have to calculate apples to onions. So 100 years, 50 years, 11%, 30 years, okay, now 10.22% per annum, okay? Dividends reinvested. So gold was 18%. If we come back to, we don't have the 15 years here, but in the last 10 years, stock exchange outperformed gold. In the past 20 years, they were almost head to head, okay? But in the 30-year term, gold is twice, they say, performed twice more than almost S&P 500. And what S&P 500 is the best, highest per capita, cap size stocks, not per capita, of USA. So they are chosen stocks, not just an arbitrary 500 stocks chosen. Okay, right on the right-hand side here, as you see, on the right-hand side, I'm showing you with my mouse, it's 745, 750%. What is this? Why did it drop from 10 to 7.5? Average return with dividends reinvested and inflation adjusted. Okay, I didn't show you inflation adjusted gold because it wasn't on that chart, but I will compare them apple to onions. I'm assuming roughly for gold, the price increase was 546%, like 5 times, 5.5 times. Every 10 years, listen to Fed, the Birds Association of United States. It's either pigeons or they're either hawkish or pigeonish, you know. So that's why I call them Birds Associations of every country. According to them, their target is 2% inflation. If we just calculate, assuming they reach their target in the past 30 years, they haven't, we know, just recently it was up to 9% even. Assuming 2%, every 10 years, US dollar loses 20% of its value. So every 5 years, one vanishes, okay? Every 10 years. So in 30 years, how much will vanish? 60% of US dollar value, of gold's value, is gone with the wind, okay? So when calculating with inflation, we must consider this. Anyway, assuming that the current price is $77,000, so what is it inflation adjusted times 0.40, because 60% is, you know, purchasing power is gone. So it's $30,800 in real terms, okay? So its value brought back to the beginning of our calculation, which started at $12,000, almost tripled, okay? Considering inflation calculations. So now after, let's go to a third chart after we explain this to you. All these head graphs and their links are attached to this video. So if you want to check back, you can come back and recheck. Now the third video I'm taking you onto. Let me make sure I'm in that section, okay? Otherwise, I talk and you don't see the graph. Right now, this is not to recommend any specific investment. I'm just giving purely what happened in the 30 years in the past, so you can make your decision. You don't have to choose one. You can choose all of them, you know, partially. But first, I have to read this graph. S&P 500 to gold ratio, because it's not as easy to understand as the previous ones. This interactive chart tracks the ratio of S&P 500 market index to the price of gold. It's a ratio. This section is very important. The number tells you how many ounces of gold it would take to buy S&P 500 at any given month. So how much gold you need to buy the index, S&P 500 index. So as you see, now we must evaluate on this. There was a time when gold was very dear and 1 ounce of gold almost was buying the S&P index. But then gold didn't increase as much. S&P increased a lot. So 5 ounces of gold could barely buy S&P index. But then from 2001 to 2010, things reversed back, okay? And a loss cycle started for stock exchanges, whereas you can see two recessions. These dark areas are the recessions. This is Lehman Brothers recession. They call it the Great Recession, whatever. And this is the previous dot-com bubble of 2000 recession. And this gray one is just the recent recession we had during COVID. Okay, so they don't last too long, you see. They last, but the drop gets very fast during the recession, as you see within the recession, and it just goes straight, and it goes to, when you reach another recession, it goes back faster. Now, after the recession of 2008, like the house prices as well, everything started, stocks started going up. But at this time again, you were able to buy with the 0.77 ounces, less than 1 ounce of gold, could buy the stock exchange. So compared to gold, stocks dropped about 5 times, 6 times. You know, it's a huge amount of drop. So this means the opposite. Gold gained, stocks fell terribly. Gold gained, and this is why they say buy gold during recessions. Just invest in gold, because you can see the recessions. And even you can say this may be just arbitrary. Now let's look at the COVID recession as well. It's a very small recession here. We'll also see it falls down during the recession from 226 ounces buying to again 1.6 ounce of gold buying the S&P 500 stock index. So then it again started going upwards, and now it's going straight line, and today it's at 2 ounces basically buying the S&P stock index. Okay, so that's why we say if it's 2,400, so it's 4,800. That's roughly the S&P stocks index. So it's around 5,000 as we know. So that's the 0.09 comes from there. So 2 ounces of gold, it's right in the middle right now. So which direction will it go? If we enter a recession, it will come down. It will come down hugely, and we'll have a gray line here. If it's the opposite, after a correction, like here, if it can go up, we'll see an upward move. But currently, all indications are expecting a recession, you know, not expecting an end of a recession. So the chances of this going down is much more higher than stock exchange losing value against gold. Chances about almost half to half, even if it falls to 1 ounces again. So that's about 50% drop in the value of the stock exchange in gold terms, okay, in gold terms. So this is what we should be investing for the future. So what we get from history, ideas and conclusions. So I leave it all up to you. I'm making my own conclusion, okay? So how am I prepared for the stock exchange situation? Since 1900 US dollars, and recently, because I live in Turkey, I also have additional, most of my watchers live in Turkey. We have additional risks observe. We are very close to, neighbor is Iran. Russia is our neighbor, almost, it used to be. Now there are a few other small ex-Russian countries, like, older, countries like Georgia, and, this type. They are now not part of Russia, but under very high Russian control, let's say. So what happens is, due to Middle East, as we are neighbor to Iran, Iraq, Syria, all of them. So we have even much more, let's say, dangerous situation. Plus, our economy is in very bad shape. We are in the last two OECD countries with the highest amount of inflation. Currently, the announced inflation, official government inflation, is 65%. Shadow calculations show that it's around 120% the past year. For future, they have changed the economic team, but the same party is running it. So we are not sure how it will go. Will it last? Will they throw the towel? But they have to run this one, not because of inflation, because Turkey is in a very bad foreign currency crisis. They need deeply, and our central bank has a balance of net minus $57 billion, minus, not positive. Okay, so we are, let's say, nation which can wake up very fast, very quickly adapt because of our history, but we cannot be sure about our next 10 years. So we must be checking unbiased, not as a national talk, just, like if we are talking about Sierra Leone in Africa, where electricity is cut in Freetown right now. Turkey was providing electricity with their generator ships, but they are not paying, so the electricity is down now in Sierra Leone. That's where Liberia and Sierra Leone are the countries of the ex-US slaves, which returned to Africa and set up their own countries. They are one of the very few rare English-speaking African countries. Okay, so I had to mention that, because if you don't pay your bills on time, you don't even have electricity. Okay, so that's a reality, and you need foreign currency to import natural gas, oil, and okay, one thing will continuously run. You won't need it. Solar energy, wind energy, okay, you will need parts for them as well, but in general, they are not as quick reacting to water. Of course, dams depends on rain and how full the dams are. So they are not reliable source of energy continuously. So we must import about 60-70% of our energy still comes from overseas as natural gas. So charcoal is still used as majority of energy. So as explained here, with very high inflation and very high jobless rates, close to 10%, Turkey has a very bad rating currently, internationally, with specific numbers. So you can, as a nationalist person, you can boast we are in very good situation, but that doesn't change the numbers. So I talk numbers. Okay, I'm a number person. I'm an economist. Okay, so we are talking economy. We are talking numbers. As I shown you, I don't just say S&P is not a good investment. Gold is not a terrible investment. I have to show it to you with numbers. Okay, so I'm not a poet. I'm not a Hans Christian Andersen. Okay, I don't tell stories and tales. So I hope you can make some suggestions from this 30-year history of gold and S&P and indexes, and then I showed you three different eras of recession, and we are talking, are we in recession? there's a big misconception about recession. Let me tell you that. When we talk recession, we are not talking about 1929-30 recession where thousands of hundreds of thousands, millions of people losing their jobs. Okay, because the previous recessions of 2008 and dot-com bubble recessions and COVID recessions, they were not such, like 1930s. So sometimes you don't even understand that you are in recession because most people that work for the Fed previously and now making YouTube videos themselves, I'm following them up. Some of them claim that if we have back-to-back 3 months of not increasing jobless rates, not dropping, that's a sign of recession. So they say we are officially in recession in the USA as well. But on the other hand, you listen to the politicians, they say we are growing, we have hundreds of jobs available. So, but again, the other side also has their claims saying the job numbers are fake. They count one person as 5% when they work part-time jobs. So the household job survey and the company job survey, I'll tell you for better understanding, are totally different. When they survey the houses, they say there is only one person working from home. The same person counted at the company level says we have 4 people working for us. It's the same person, working in the morning at the cashier, at nighttime as a pizza maker, and delivery man. So part-time jobs, okay? So 3 hours, 4-hour jobs, it's four person. It's like in Turkish we say, if a person speaks one language is one person, 2 language, 3 person, 3 languages, 3 person. So now this comes through in the job creation in USA. Anyway, time will show us. Professor Hanke from Johns Hopkins University claimed that we were going to be in, recession in the USA. According to their calculations, he's an expert on inflation and recessions. End of 2023 and beginning first quarter of 2024. And first quarter of 24 passed, and there is no declared recession. And he announced that they made one mistake being recession is still coming to the USA. So it's late. It's just about a year late. And they asked him what calculation they mistakenly made. They didn't calculate how much money was saved during COVID era by millions of Americans. Right now they are spending from that savings. So they couldn't think of that much money would be saved. Americans are spenders, so they just received the aids and just spent. Looks like they didn't, and they saved the money. So nowadays they are claiming these savings are getting vanished. Okay, so similar will happen in Turkey. It's the 28th minute. We started just tightening, sort of, because our retail numbers exploded in March. They are the highest in the last 2 years. How can you tighten when retail numbers are exploding? They are assuming, okay, that was election month, next month. Well, US have been fighting for Fed, assumably fighting. They are not tightening enough as well. So the existing rate, some people are very hopeful that inflation will quickly come down in 4 or 5 months, and interest rates will start to drop. However, others calculate even if they are able to sustain the same economic people applying the same economic measures, it's going to take 3 to 4 years and of course the country people are very upset. Retired people, the lowest pay is 10,000 TL, which is 10,000 TL. I didn't calculate. I know the base pay in US dollars. 10,000 TL divided by 32 TL, they get $310 per month. of this year, not the 30 years ago. Okay, you must apply 10% decrease. So if they were receiving $300 20 years ago, that's good money, you know. But today, it's BS. Okay, it's not. It's not a good money. It's tin. It's not gold. Okay, so this is it for tonight. So I will leave you here with the graphs and everything, and see you in another video soon.